But I think we need to have a lot more honest conversations about finance and economics and about what is needed for a transition. The farming side, in many cases, the only finance talk you have is with your bank. Let's say the money side or the City of London or wherever financial capital you have nearby, where the interest in regeneration is starting to grow. They are a tool, a very powerful tool. There's a lot of resources and basically energy in finance. And it has been mostly used for non-regenerative stuff. And my thesis is that we don't have a lot of time and we better use all the tools in our toolbox we have, including finance, which means we have to learn the language. We have to get comfortable to talk with the suits, at least be comfortable and understand if you want to engage in that world as a farmer, as the company operating in the regen space. And because trees cost money and machinery costs money.
Hi, welcome to Integration, where we explore the art of moving forward, not just sustaining, but transforming. The great ones among us don't see setbacks, only the landscape of possibility before them. My guests have learned to navigate what is, which is what inspires me, to find ways to keep going and leave the world better than they found it. When the storm comes, they don't just endure, they lean into it. I hope you enjoy my guest today. So my question is going to be around the transition between the cold metrics of finance to storytelling and the dual cultural immersion into very different food systems, Italian agrarian richness and the Dutch industrial. How have you found your educational cultural experiences shaping your equity lens agriculture? And how do you feel that mixture gives you a unique voice when navigating this regenerative space? About a year ago, Koen, and I hope I'm saying your name right, Koen van Seijen. Is that correct?
Koen van Seijen, yeah, but it's very Dutch.
Seijen. I even looked up how to pronounce your name and it didn't say Seijen. I went,
AI. Oh my God. Yeah, we should correct that somewhere.
So it was great running into you at Groundswell because I just wanted to shake hands because I find the whole meeting people in the cyber universe, you're so much more stunning in person than all the years that I have listened to you and seen the odd visual thing. But I'm like, oh, your blue eyes and your personality really are much more profound than I think people can get over the internet, which is really interesting because I think you did a great job emceeing the AI thing that we were listening to. They were all very strong personalities on that.
It was herding cats. Yeah, it was an interesting stage. But it's an interesting point on video versus audio. We've been doing audio for so long simply because it was the way to start and relatively low entry point, and this kind of video conferencing and wasn't really a thing 9 years ago. But we've been like wrestling with should we do more video and or not, and we've experimented a bit and I'm not so convinced yet. I would like to be everywhere with my face and not with my voice only, and I think I still prefer the voice only, but it's undeniable YouTube is a big podcasting or video podcasting platform. So we've been, but I really enjoy doing things in person. I enjoy things doing in person, like with an audience, you get reactions, you can make jokes and things like that.
Yeah. And I will say though, I have listened to a lot of your things, and Tony being a friend of mine, I did start at number one. So Tony Lovell, I heard you saying, oh, you can start at Tony Lovell. But actually I consider him more from a broadacre point of view, more experienced with regen than most people who are even people like Gabe Brown entering what I consider fairly late in the space, having started in the late 90s myself. And I feel the most difficult thing for me as a visual person is listening for so long without the visual. Like I need to see the person. I just struggle to just listen. Everyone's different. I actually do these podcasts as a transcript for people that just want to read, because some people don't listen. Some people only listen, like all the farmers seem to sit on their tractors and only listen. So for farmers, yeah, it's great for farmers. And then there's so many people now that are very visual, that are only visual. So it really depends on your market. And I suppose having listened to so much regen stuff from 30 years of listening to farming stuff, because I don't farm. And the biggest thing that I've been trying to do for so many years is get money into the space, which is why I follow you so strongly, because you focus it on investment. And so my questions to you are really around that business part of your journey. So you started in Tilburg, where you studied, and then you got into storytelling, which is an unusual switch. And I know you speak about having a coffee with Tony Lovell and SLM Partners and that being a trigger for you. But of your podcasts that I've listened to in investing in regenerative agriculture are pretty much on how to be a farmer. There are a lot on investment, but I'm really interested in that transition phase because I think there's not enough focus on the money part. For me, regenerative agriculture is very like organic in that a lot of people get into it, but get out because they can't make it work. And I'm seeing more and more people like Gabe coming online, doing all the big talking. But I know from people on the ground that farmers are failing with it because they've been educated with this reductive agrochemical education, like here's the recipe, follow the recipe, here's the outcome education for so long that the sort of education that you are providing in it really needs to be in person. A lot of stuff is very particular to the land in front of them. And I'm really interested to see how you've gone in that because you've had a big journey yourself in learning from what is it, nothing, to really being so educated. I'm interested to see where you see the money occurring and what your feeling is with all that.
I mean, just to start, I'm not a farmer nor, let's say, an investor, although we have been making smaller investment in this space. And also I don't have the huge urge to become a farmer, but what I do see and what we've been observing with the podcast and the journey that money is a thing we don't talk about a lot in farming. And in this current imperfect economic system we have, farms are small businesses, or actually in some cases relatively large businesses. And in the conventional extractive system, they hardly make any money if they make. And I think it's not a dirty secret, obviously, but like if you borrow $850,000 a year to run something and you make maybe 50, in any other sector we wouldn't do that. Like that's not bankable. We can do it here because there's the underlying value of the land. But I think we need to have a lot more honest conversations about finance and economics and about what is needed for a transition. And what we try to do with the podcast is sort of bridge that, and with the work around it, to bridge that gap between the farming side, where in many cases the only finance talk you have is with your bank, and the let's say the money side, or the city of London, or wherever financial capital you have nearby, where the interest in regeneration is starting to grow. And I'm not saying because finance is the most important thing or investments are let's say the end all, but they are a tool, a very powerful tool. There's a lot of resources and basically energy in finance. And it has been mostly used for non-regenerative stuff. And my thesis is that we don't have a lot of time, and we'd better use all the tools in our toolbox we have, including finance, which means we have to learn the language. We have to get comfortable to talk with the suits, quote unquote. I'm doing air quotes if you're listening to this, and at least be comfortable and understand if you want to engage in that world or not, but under what conditions, as a farmer, as a company operating in the regen space, because trees cost money and machinery costs money, and we currently in the imperfection of the current economic system, I would argue better use this tool to its best potential and dance with attention, because it's not going to be easy. There's a lot of a lot of interest from the finance sector, and there is a lot of money available. And the question, I think, is more, how do we put it as effectively and smartly to work? And in farming, there are returns, and there are interesting pockets where already it makes sense to do a lot of things. And one of the things that got triggered me with Tony Lovell and others is the grazing space, where if you do it well, with of course an entrepreneurial hat on, there are very interesting returns to be made, and that triggered Tony to set up SLM and many others to see this as a better case, where costs are lower, premiums could be there. I mean, it makes a lot of sense from a financial point of view. I'm not saying that's easy, obviously. I mean, none of this is easy.
Yeah, and I particularly to say take SLM because I think they're really pioneers in it. And I was talking to Tony through a really extensive drought. In fact, I was going up to talk to him about his camel project that he was doing, and I ended up making a camel fat soap for him and doing all sorts of things. And then he passed away. Literally, he got a lymphoma burst, and as I turned up at the airplane, he was picking me up and ended up not turning up. So it was a real drama and a real loss, I feel, for the regenerative ag space on a big scale, because a lot of the funds you speak to are quite small in Europe comparatively. And I don't know, I mean, Tony was sort of saying he was really pioneering the camels as a really good thing for a desert culture. And I'm pretty sure they took the camels off, but he had sent me images, which I still have, of water penetration up to 72 inches into the ground, which is phenomenal in that area where they get one rain event a year. I mean, people can't imagine what this is like. We're talking thousands of hectares, like really broad scale, and that the ability to do that is massive. But I don't know whether they continued with it with the SLM. Do you know? I don't know whether they.
I mean, I know the fund is. I mean, the fund, the grazing piece. We should probably do a deep dive on that at some point. Definitely hit the worst drought ever recorded, which probably in a few years is going to be not the worst drought anymore as we are climate rating. But at that point, it was, I think, 6 or 7 years. It was quite extreme. But from the last time I've talked to people around it, and I would have to check with Paul, because I think they're at the end of the fund lifetime. So it's also an interesting case of now, like what the properties are being sold and how are they compared to other properties that haven't been managed, let's say, holistically. So I don't know. I know what I heard is that it responded really well to much better weather and more water, let's say, in the last years. But of course, it went straight into, I think, a 6 or 7 year drought, which with all the holistic management you can possibly do, is going to be awful anyway. And especially if it's the first few years. So it would be interesting, I think, to unpack how they did. But I remember speaking to Tony, I think our second conversation, they were in the drought and he was mentioning things like, because of our holistic management, we are actually destocking completely, and we have that flexibility and we have that longer time frame to do things that others can't, because we don't need to have animals on the land and basically keep destroying or keep because there's no water and there's nothing to eat. So we have more flexibility. I don't know how that panned out over the, I think, 12 or 14 years of the fund. So that would be an interesting one actually to unpack. But the world has changed a lot, because I remember him fundraising for that fund and not mentioning carbon anywhere. And I asked him about it, and he was like, because I want to be taken seriously by institutional investors. And if I mention negative or carbon sequestration and agriculture, I mean, nobody at that point in the finance world had heard about soil carbon or anything like that. So just to give a bit of perspective for the listeners and people watching, that's 15 years ago. That's not such a long time. And look where we are now with all the controversy, etc. But at least I think agriculture and food are part of the solution package for many. And no, we're not there yet. And no, we need, and yes, we need a lot more investment flows and a lot of education. But I remember talking to investors at that time, and the moment you said food and agriculture and carbon, people just glassed over and wanted to talk about electric mobility or something else. So the sector has come a long way, just to say, but we should look into how the original SLM fund has been doing or has done, because I think it's pretty much at the end now.
So in just sort of touching on that, I wanted to know, kind of segueing into that, with the US presidency being so anti-climate on the back of the whistleblowing problems in the carbon market around soil, which is someone doing soil trade, has been impossible as a business. I wanted to know whether, I know Europe kept maintaining things from a legal point of view, and Australia has too, and they've been pushing the farmers to try and do soil carbon because obviously it has all these other positive things. But with that sort of moving away from the American thing, have you seen the same? I mean, we just observed the money markets just went, oh, we don't have to do it now, and just stopped. But are you seeing the same thing in Europe? It's very different there.
I mean, soil carbon has never been part of the, as far as I know. So first of all, I'm not an expert in the carbon markets, just to be very clear. But soil carbon hasn't been part of the regulatory or the regulated market in Europe. That has been emissions, the trade emission scheme only. What I've seen, and maybe you've noticed in the podcast as well, that we've been paying less and less attention to like soil carbon marketplaces and things like that. We did quite a few interviews in the early years, and now less and less, just simply because I don't think it's so relevant at the moment. What you see with a lot of these marketplaces is that they're moving to insetting, meaning they start working with larger food companies or smaller ones, and working with their farmers, purchasers with their farmers to do the training on the ground, which is exactly the point you made before, and using the issued carbon credits as a sort of, let's say, grease to grease the engine and to speed up. And some of these companies,
Tax deductions, didn't they? They actually
I mean,
passed a law.
no, no, they're not. Not as far as I know.
I heard they went through the land banking group, that I heard that they had passed a law for if it was in your food chain that you could claim it.
You can use them as, but not for tax reductions. You can use them as credits. But what I've seen for the prices I've seen, it's almost more interesting to see it as an investment in your, let's say, supply chain long-termism. In terms of farm security, in terms of simple procurement. And I think that's the bigger switch here. As soon as it's a procurement discussion, like we cannot get our olives because of an olive crisis, or we cannot get our orange juice, as Land Banking Group uses as an example, or cacao. I'm almost more interested to look at those crops where the stress is the highest. And yes, carbon is interesting. It could be a nice, maybe if Microsoft buys your credits, of course, it's a nice amount of money, but it's almost per hectare, not enough to make a farmer move. But if there's a procurement agreement, and if there's actually a company that is investing in their supply chain, that I think is the big switch that Land Banking Group is trying to accomplish with the accountancy firms, etc. Basically telling this is an investment in your infrastructure, in your supply chain. This is not a cost. And as soon as it's an investment, you have a very different CFO discussion instead of and CSR discussion. And in what way carbon credits are part of that, it depends, I think, on the crop and the jurisdiction and where you're buying from. And can you account for it as well? Can you, instead of buying more voluntary credits, can you use these? That really, really depends. But I see many of these marketplaces, at least in Europe, talking about insetting and working with companies in their supply chain to make them more resilient, compared to, oh, we're going to work with these farmers, issue credits, and then sell them somewhere to whoever wants to buy. But you see big deals with Microsoft, but they're all on biochar, and they're all on enhanced rock weathering. So
they're tiny amounts of money too. They're not supplementing the farmer in any way that I can see. And they only made one purchase in Australia, which hit the newspapers. And we've really only had one major sale, which was through Carbon Link up in Queensland. Even though there's a lot, the farmers are holding on to them, which they're waiting for the price to go up, which is kind of like, I kind of get people don't understand, unless you actually sell, there's no market. And
I've just, it's not a big enough of, I've seen some slides, of course, of companies, but basically arguing, yes, carbon is interesting. It's not going to move the needle. Carbon credits, for farmers. What's much more important is to reinvent marketplaces for procurement, and to make sure more money flows to farmers because of quality, and to focus on developing new supply chains and all of these potentially more complicated work through brands. Like, how do you get it better, faster to the end consumer, to the next processor, and making sure that more money flows because of quality and because of resilience, more money flows to the farmer. And so I don't know the pushback now in anything to do with climate. You see Microsoft keeps buying removal credits, again, only biochar at scale and enhanced rock weathering, which both of them are interesting and fine. A big deal, I think, in India they did recently. But anything else has not been at any scale that can be bought or has been bought. I don't know. That might change. We don't know. I'm not in those discussions in Europe.
I personally think that's got a lot to do with the money markets moving with whatever the US presidency is saying, because it's very influenced by that. So I've kind of taken a pause on it myself. But I was just curious to see, because I knew the laws were a little bit different in Europe, and I'm not familiar with those intricacies that you just said. We're pretty big on soil carbon here, but the tree thing, which is really what you're saying in a lot of the carbon areas, tree planting or tree preservation. I call it mitigation credits as opposed to actually sequestration credits. And Australia's got, the last time I attended a webinar, it was only like 6% of any tree project was actually planting trees, which is just not nearly enough. So, but then others say we've got enough trees, because trees do so kind of plant themselves. Certainly the eucalypts plant themselves pretty quickly. I've got 58 acres, so I know about how quickly they plant themselves. But it's interesting to see the change in this area and where the money is going. Are you finding the money in the situation you're saying, is that actually funding upfront to farmers to do transition by investing in their procurement lines?
I mean, it's been a few years now, but we've done a full series on transition finance, which was a very hip word at the time. It still is, but with a farmer as a co-host in Eastern Germany, so definitely a specific context. But the conclusion was he doesn't need transition finance until he gets better procurement and offtake agreements. And I think there is a big a big conundrum to fix or to work on. And I think a lot of entrepreneurs are actually like, how do you build brands? How do you build supply chains that make sense for farmers? And we've covered that with Grounded in East Africa, but also the coffee market in Brazil, the olive oil market. Like, how do you reinvent them, and how do you make sure more money flows to the farmer for the right things? But I think it's got to be much more around quality, and to use the word nutrient density or nutrient quality, like how can we incentivize, like if we really want the food system to shift, it's not going to be, because we added a carbon credit to this, or a biodiversity credit, or a water credit, or whatever credit it's going to be. We need to start looking at, okay, how do we grow this grain better, and how do we make sure that that quality and the work that the farmer puts into that is rewarded? And that might mean specific infrastructure on around mills, which we covered in Oregon in the US. It might mean different contracts with Nestle. I don't know what it means. It depends on the context. But I think it has to be a conversation about food security and procurement risk, and about quality. And then, of course, there's the carbon piece. And of course, there's the biodiversity piece. And of course, there's more life in the soil and above the soil. That's all true. But to get attention of buyers, you talk about procurement risks, and you talk about quality. And it depends on the crop what that means. Could it be polyphenol levels in olive oil, or it could be protein levels in I mean, that really depends. But you see that shifting now. You see these companies very seriously looking at the risk, simply because there are so many weather crises and extreme events that it's simply at risk of harvesting, not at risk of, maybe in 10 years, 15 years, we're not. No, actually now, there are many crops that are not being harvested or not being planted because of, and you see the resilient farms that have been investing in this for 10, 15 years doing way better. So people are starting to pay attention to that. And then, as we said before, then it's an investment discussion and a CFO discussion, which simply is just much more powerful.
So what you're observing then is still pretty much in that reductionist phase of the procurement lines. And from the farmer, they're still in, I want a premium before I'll do it. And I find those two things are still, I mean, the Dan Kittredge stuff with the nutrient density, I haven't seen it translating into, it's a bit like organic. It hasn't grown. Yes, it's grown, but not global output grown. It's just a nice little thing for the elite. And I was kind of looking at that the focus seems to be still very superficial. And if anything, let's take the longevity market, because I was just recently in Dubai, and all the food there is imported. So you'd think you'd be able to find an import line where they're interested in nutrient density, because it reflects on longevity. But no, I couldn't get any connection on that. They wanted all the food to look perfect, and all thing was important, and all was tasteless. But in the same thing, I went to Florence on my way through, and I've been to Italy many times over my lifetime, but I was astounded how bad the food was. And when I did a quick sort of investigation on it, there was a big switch towards monocultural imports from the Netherlands and various places rather than growing locally. But a lot of your podcast, I noticed, is much more focused on the small artisan farmer. You know, they're just amazing, and they still do amazing food, and they still grow, and they do a lot more direct supply with the restaurant. which I then also saw it grounded. I don't know if you went to one of the banquets, but it was being supplied by a disrupting group called Shrub. Did you hear of them?
No, I didn't to the groundswell banquet. No, I didn't.
They had two guys called Shrub, and they were doing a disruption around that logistics area of getting farmers and supplying directly to restaurants, which, you know, you can do in England because it's small. You couldn't do it in Australia because we're just too far away for pretty much everything. And we do direct supply in some things. But I was curious to see whether you were seeing more of that sort of area where the focus was getting premium for the farmer, because everyone's focusing on trying to get the premium for the farmer for doing something regeneratively, yet really on a big scale and investment point of view, it looks like the focus is on just survival, like enough volume to meet the needs of whatever the big company is supplying stuff. They're not really all that focused on nutrient, carbon, water are all integrated. They haven't kind of got that. We could stop talking about it like that. We could just say survival and micro.
Yeah, no, I think definitely the quality piece is not that hasn't landed yet beyond maybe the let's say the nutrient density geeks, but it's being worked on and the research is let's say it's speeding up the agri-health angle, like agriculture and health are intimately connected, is definitely in another place than 10, 15 or even more years ago. And you see some of the front runner suppliers starting to, and farms as well, and that really want to show like, look, what we sell, this tomato is really another product. And what we grow, in terms of animal protein is really another thing. You see Audacious, Eric Smith was at Groundswell. You see Seedside on the grain side in Portugal, and we're closing a small investment in. I mean, they're starting to these early signs, but it really depends on, I think, your supply chain and supply web. And until now, and maybe that's Dubai, maybe that's Florence to a certain extent, it's been too easy to get away, especially in, let's say, more touristy or people where you don't have to serve regular people continuously, because you can eat amazingly in Florence, but you have to search really well because everything else is just too easy to sell to people that are there for a few days maybe and will never, I mean, they might complain on Google, but that's sort of it. But there are, and so it's very early, but I'm amazed how much progress we've made in that conversation, because a few years ago, if you would say, yeah, but how you manage soil has an impact on the nutrient quality or the quality in the tomato, people would look at you strangely, unless you were Dan Barber or something like that. That's slowly coming. Do we have any supply chain that's built around that? Not really, except for probably a few crops, like specialty coffee. There is a market for quality. There's a simple grading system, or relatively simple grading system, and your premiums are enormous. Cacao the same, olive oil the same. Like you have just a built-in polyphenol level. If you're above that, your flavor is that.
That's because coffee people are geeks.
Yes, but it wasn't there a couple of years ago. Like it's an interesting, like if you would say that if we would have this conversation 15 years ago,
yes,
there was a very small group of geeks, but now the group is actually quite significant. And in wine the same. And so there are more and more of these there where you can make. I mean, we had a long conversation with Philippe Couders in Brazil, and coming back to the carbon piece, they say the carbon credits we develop and we are about to sell, of course, until they're sold, we can't claim anything, we can't say anything, are a nice extra pudding, like an extra cherry on the pudding, and it makes it financeable. That's why we can go to a bank and we can actually finance this stuff. But actually, what's the underlying value is the coffee we grow, high quality shade. Every bean will be sold in different gradings. It's the hardwood we do. It's the agroforestry system, AKI, etc. And he says, yeah, the carbon credit is an extra that unlocks it, but it's not the main driver. Actually, main driver are quality markets, or markets that are established. Of course, that's not the same in broad acre crop. This is very large scale as well, but large grain markets are notoriously commodified. But you see Wild Farm doing things in the UK, it's a very small example, but still working with 120 plus, maybe 130 farmers now. Quite a few large scale for the UK setting, obviously, but able somehow to have everything from artisanal bakeries to actually Waitrose, a big supermarket chain, pay significant premiums now because they want to have this flour in their bread, and they want to be able to claim full of life, and they want to be able to, not necessarily quality and health, because of course it's a highly processed bread that's not going to make your health, but they build a brand around regen grain, which I think is quite unique. So it's possible. We see some early signs, but of course it's not the norm. Most of it is just extremely commodified, relatively tasteless. You're lucky if it's not poisoning you, but you're definitely not going to get the nutrients you need and want, let alone the micronutrients that. But I see the first signs compared to 5 or 10 years ago. At least we have those conversations. Look, food is health. And healthy food comes out of healthy soil. There's just no shortcut you can necessarily take. And like every week or month, more papers are coming out. And yeah, we slowly, the rest of the world is starting to wake up to that. I think we need to be ready, because when the demand comes and people say, like, I want to build a food as medicine cherry company, whatever, like, we need to have enough cherries. Like, there needs to be a response to that to be able to match that demand, because the foodies the health geeks are starting to wake up more and more. You see all the wearables and all the health focus that hasn't been there. People are measuring their mercury levels in their blood. They're measuring their gut health. They're measuring, at some point, most of this group will end up focusing on soil and start
functional medicine. So
functional medicine. Where do they go? They go to the
everywhere. Are you seeing that? Just, I mean, I know it's moving in America, because I've been following it in America, and I saw it. I mean, I actually saw it in Dubai, the functional medicines, because I do think that's maybe where it's going to come in. I keep looking, where is the inroad? Because there is this.
It's one of those big angles. Is it happening in Australia as well? I've not seen it in Europe except for the UK. To some extent.
Oh, that's interesting. In Australia, it's boutique, functional. I mean, I have to sort them out. I mean, I've studied this area for so long, it's difficult for me to be impartial, but it's definitely there. Now, I'm going to segue a little bit in this conversation, because the main focus of my talk is actually really about surviving. And a lot of these people that we've touched on are heroes in that they have continued to survive. Dan Kittredge being one, people that have, passionately started out to try and make a change in this area and not gotten anywhere. And I was listening to your AquaSpark interview, and I thought, wow, that was so heavy. So just to give a bit of background, I mean, I could go into it, but probably better that you go into it of what you can say. I did research it and I could see it's all public knowledge anyway, but you were in the a chair of the fund that recommended it or started it or suggested it. As I understand, you were recommending impact things to invest in. Is that correct? How that developed? How
specifically on AquaSpark, or
specifically on the fishery that had the issue, the fishery?
Yeah, no, I mean, I used to be part of AquaSpark, the founding team. AquaSpark is an evergreen. We did a long interview with Mike, an evergreen fund focused on sustainable aquaculture. I worked there for a year and a half, I think, but it was before the first close and before the first investments. And what AquaSpark run into, apart from that, we unpacked like evergreen and how that can get to scale, which I think was, in general, not just for the aquaculture space, an interesting conversation, or something I really, really enjoyed, is one of their portfolio companies got caught. You can Google it, where they are now in the process, because it's messy and it's definitely not pretty, on quite a massive fraud in terms of revenue numbers and basically cooking up the books. And all the big names of investors were part of it, not just AquaSpark, but Temasek and all the names like it is an Indonesian-based company that's in Southeast Asia. We're part, and nobody saw it, or let's say nobody looked deep enough to see it. And of course, when you have this was a unicorn valuation. So when you have that in your portfolio, there was already an interesting challenge for an evergreen structure, because it was basically too big for the rest. Like, it really skewed valuations, and they were thinking, okay, how do we sort of split it off, and how do we make sure this doesn't not damage the fund, but doesn't make the fund more difficult to work on, which is an interesting thing from a structure perspective. Let's say that got resolved because it didn't turn out to be a unicorn. But of course, the mess in that is huge. If you're a company you invested in, I think once or twice, even more, and with a lot of other people that all done their DD and all done their things, and then it turns out to be just worth way less, if not nothing. Not good for the sector.
I kind of think that's the sort of investment point I was kind of touching on. It sounds like you'd already left before that DD was done. You may have been just involved in the looking at it at the beginning thing, but it's more How do they all miss it? I mean, I'm always astounded by these massive collapses in banking or whatever. And it's like they haven't done it.
If you look at a number of things, you look at very convincing founders, especially early stage. There's not so much to see. Like I think the seed round or pre-seed round, when you join, it's much more, do you believe the founders? And in most cases, that doesn't go well in general because you're so early. I think later on, now they were preparing for a much larger round. And then, of course, you're doing farm visits, etc. And somehow companies like that, in I think the Enron cases and others as well, they manage to show you only the things that work, and they manage to sort of, everyone wants to believe it as well. Oh, we have an impact unicorn with this crazy valuation. Like it somehow becomes a story that everybody wants to believe in, and also does the poking around, but does the poking around to a certain extent. And it is relatively far away from financial centers. So yes, you go on farm visit, and yes, you go and visit, and you're going to see the fish farmers using their technology, and they were really using it, just not to the extent of, or not to the numbers that turned out to be in the decks. And it always astonishes me as well, but you cannot see the full thing. But it also astonishes me when people buy, I don't know, real estate, almost not without visiting, but not seeing the deep mess that is in the backyard, or things like that, because people want to believe the story and want to believe the payout.
That's really interesting.
It's convincing. And many people, I'm not saying in this case, but especially early, you invest based on a PowerPoint, or you invest based on the conviction of an entrepreneurial team.
Even and new things like that, because it was so new. I mean, the
it made so much sense. It makes so much sense. Like an automatic feeder for, I think, in this case, shrimp, to save a lot of feed and to automate basically hand throwing feed into ponds, which there are
lots of
tens of millions of in Indonesia. There are a lot of those. Like, it's a very convincing story. Technology comes in, of course. AI wasn't there yet at that time, but like, how do you? And we know that even from the most advanced aquaculture scene in the world, which is salmon in Norway, probably, that like overfeeding is a thing, and feed is the most expensive input. So they pump in a lot of this feed into these big nets, and then I remember there was a camera in the bottom to see when the feed comes through, which means, oh, let's stop it. That's not anymore. Now they start listening to the sound of the fish. Are they still hungry? But that was the most advanced in the world. Imagine the rest of the world, you throw in a lot of feed and hope that it's more or less enough and it doesn't go to the bottom, polluting your pond. So the story of automating that and really reducing feed and higher quality feed and making sure that's all traceable is a very convincing one. It's a very good company, just not the size that they turn out to be claiming.
Fascinating, because I did a deep dive after that particular interview into aquafishery, and I think you had James Arthur on your conversation as well, James Arthur Smith, and I ended up interviewing him, and I had a wonderful conversation with him. If you want to listen to it, it's a fabulous podcast. I learned so much. And I also interviewed somebody I've known for a long time called David Carter from Austral Fisheries. Have you heard of him?
No.
He's been in charge as CEO of Austral Fisheries for well over 20 years, and they fish wild fishing. And it's basically licensed areas, and it's like the ultimate regen scenario, because they have to completely look after their ecosystem and keep it in perfect condition so that it will keep supplying them with fish in that area. So it's kind of fascinating to weigh up the two and see where would be the things as an investor or a person wanting to get to the bottom of it, what would you look at? And that's why I was interested in your AquaSpark story and what it taught you. What did you learn from it as an investor, or not even as an investor, just as someone in that investment space advising or suggesting or looking? Because it's a learning thing, isn't it? To go, oh, how did I not see that? So what did you learn out of that experience with it, even if it's past the time you were there?
I mean, of course, I have never looked deeply into, in this case, a specific company, but I think a general lesson from any investor looking at regeneration, like when it sounds almost too good to be true, it might be, not saying that it is, but like crazy returns in the sector of regeneration and restoration are just suspicious. When somebody's promising, especially I know the world of farming, of course, better, when they're promising high double digit or like the returns on certain crops, I'm not saying it's impossible. People are doing it. Absolutely true. If you know how to get, I don't know, the regen organic soy premiums in the US and you know how to operate, it's possible, but it's also suspicious in a sense to really ask a few more questions. Like because it's very easy to put something on a slide. I can do that and I'm not a farmer. And I can make, especially now with AI, I can make a super convincing slide how we're going to put 200 million to work in, say something that I don't know anything about, blueberries. And I can come up with the price that makes sense and come up with the cost structure and who's going to farm that and what the land costs. That doesn't mean that that's feasible at all, especially in something of getting all of this technology to ponds, and especially in the real world. Maybe it's possible in software, and maybe people got sort of alluded, let's sell, let's see, I don't know, an Instagram or WhatsApp or things with crazy access. Now in AI, that's happening even more. But in the quote unquote real world where you deal with biology and photosynthesis, that's just not the case. Doesn't mean there are no interesting returns, but your mental model has to be very different than the money markets and in terms of time and just return expectations. Again, not saying they're not there, but just to be cautious. Because in biology, things are, they just move at different speeds and things go wrong as they always do.
And so you, in all these years now of interviewing and doing a lot of farm visits yourself, you realize that you're actually becoming an expert because you walk on the land, because so many people don't walk on the land. They just learn it theoretically. Do you see yourself becoming more an advisor in that impact space to drive money into the area?
I thought you were going to ask if more of a farm advisor, which would be a very strong no. Don't ask me anything. Don't ask me anything. I know who to ask. I know. Yeah, I know. On the farming side, probably I know who to call, but definitely don't ask me for that. On the investment side, it's always tricky. I think one of the reasons we started our investment syndicate is because it's very important to have skin in the game, if possible. Like I can talk all I want about wild farms and they're so amazing and blah, 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 or not. But I'm a small investor in them. And so that makes it very different. For me, there's a meaningful amount of money on the line for them to succeed. And I know it's not going to be easy, but I think, so investment advice, I'm not allowed to give. There are many rules around it and I wouldn't do that. But I can say, this is interesting. I've put money in it. And this, I think, is less interesting because of this and this, or this fits in a larger, let's say, worldview or framework that I think is really important. And I think it's important to invest across a lot of different things in the regen space because there's no silver bullet. We're going to need new companies, new technology, new offtake agreements, new financial equipment. Like all of that is going to be needed because this is a marathon. And so what I can only share when people ask is what I would do or what I have done, or appointed people that have been doing things very actively that maybe have a larger, let's say, wealth to put to work, and say, have a coffee with them, because it only from experience and only when there's money on the line, I think it's really relevant, because otherwise it's all easy to say, oh, I would do this with that amount of money, or I would do that if I were them. But unless you actually put money to work, and of course we're fortunate enough to have extra and excess in that sense, then it becomes real, because then you can really say, okay, you're so enthusiastic about this water bottle company, would you put money in it or not? And then like, oh, I don't know. And it changes that energy and conversation immediately when it's about a real transaction.
Yeah. Do you think there's more people around in the financial sector that will become highly educated as you are in terms of actual walking on the ground, understanding what the differences are? From a financial those that do advise do need to be on the ground and do need to see what the differences are. Do you see there's more of that coming up as the industry moving along now, where they do know what they're talking about?
There are a lot of assumptions there. So one, I don't think I'm an expert at all, but I have seen a lot of people. Yeah, but talking to them doesn't necessarily mean you get their knowledge. But we've seen definitely an interest from people, let's say, with financial backgrounds to start developing projects in farming and go way deeper than I go into hazelnuts and really understand, okay, what are the things at scale to do with hazelnuts or with almonds or with cattle. And so it's just fascinating to see that. That's our impact, in a sense, is getting people that are not active in farming with experience elsewhere, from fundraising to building organizations, NGOs, companies, etc., and hopefully they get bitten by the soil bug, and we can help them to speed up their knowledge by sending them, like, go and talk to them, and go and talk to this farmer, and go and talk to et cetera, et cetera. And hopefully they build something in the space, and hopefully then they will come back some point on the podcast to talk about that. But we've seen that more and more. And I think that's the piece that gives me most hope, is that we have an influx of talent. And yes, they don't know everything at the beginning. Of course, nobody does. They learn very quickly, usually because these are very spongy people. Let's say they are used to absorb something in a space they don't know, and they are not letting go. Like, it's not that they think, oh, this soil thing is so difficult, now I'm going to go somewhere else. They actually are committed for different reasons. Could be health, could be inequality, could be financial reasons, whatever. But they start building things. And like, the amount of people we've had on the podcast that weren't in this space 6-7 years ago, or even 5 years ago, is quite significant. And the amount of things they're doing, is it perfect? No. Is it way better than what they were doing before necessarily, or the alternative scenarios of what they could be doing? Yes. And so I think they deserve all the support, even though they haven't been here for 30 years, and even though they haven't farmed 10,000 hectares yet for 10 years. But they are learning fast, and they're going pretty. They find let's say the mentors and the gurus pretty quickly, and they are the ones that are going to scale this to a certain extent. So, yeah, we see more, and I keep repeating, but I think we end up almost every episode, not everyone. Like, if you're interested, go and visit advanced farmers, go and listen and ask a lot of questions, and you will learn more. Probably everything you thought about agriculture can go out of the window, and you will learn more in that. Hopefully a day, don't spend a few hours, just spend more and really absorb, because there is so much to do. And yeah, we just need more hands and eyes, and, as Jonathan Landgren likes to say, and John Kemp, I think as well, more hearts on the land, because there is a connection there. You can't farm 100,000 hectares. Maybe if you have a lot of heart capacity, you can do that. But we need more people on the land somehow interacting with soil. And I slowly see it again, super early, but I see a cohort of people that, if you told them 5 years ago soil, they would say, what? And now they're like fully like deep into it and building interesting scalable things.
I think it's worth popping into that little thing you just said then, that if people do go out and do that, they will get often completely diametrically conflicting viewpoints being said to them. And to remember that every piece of land is different. So the farmer that says the opposite of another farmer could be dealing with completely different soil. That's why looking under the soil is worth looking at. It might look green on the top and they grow the same thing, but underneath there's a totally different geology, different weather, all the rest of those things. And I think people, that's why I keep focusing on soil, but I think people forget that things are not as they seem, and to be a little bit more lenient in understanding how variable nature is to get those results, which I think is also why the carbon market has struggled, because people just think it'll be the same everywhere. And it's not. It's very different. And not everybody can do it. Like, not everybody can farm, or everybody can do a business. Some people are great business people. They're just natural born sellers and natural born entrepreneurs, and they make things happen. So it is interesting to see where those variables sit in all of that. So in your journey as a podcaster, are we going to say you're a podcaster? What do you want to call it these days?
I mean, predominantly podcasting. Yeah.
Where is your trajectory for yourself? What do you see as what would you like to be doing next? And is there an end goal, or is there any focus that you'd like to take whatever it is you're doing into the next level as a business, and also as whatever your passion is in life?
I mean, we've done about 400 episodes now, and I can easily see another 400. We have a lot of people we need to check in with. We haven't done enough. We have a lot of other stories to tell. So I'm sorry for anybody that reached out and wants to be on the podcast. We are in the lucky position. Some other podcasts don't have that, like in other sectors, that we have way too many stories to tell. Like, it's always picking and trying to squeeze way too many things through like quite a narrow hole, which is one episode a week at the moment. We used to do a bit more, but it was too much work. So in that sense, that
people don't understand that.
No, we did 75 episodes last year and the year before as well. This year we might do 50, but probably a bit more because we have recorded so much. So there's so many stories to tell, so many people that are doing interesting, relevant things. And so that will continue. The business model there is relatively clear. We have financial supporters that support us per year or per month or whatever fits them. We have a number of foundations that support us for specific series, and we're part of 2 European programs. And so that's a business in itself. So people are always surprised that a podcast actually makes money, and not crazy, but it does work. But next to that, we have the syndicate, which continues to grow as well. So I'm really excited about not turning it into a fund, no plans there, but definitely growing that group of people that have access to these deals and invest in it. We try and we keep fighting to keep it as accessible as possible. For 1,000 is the minimum, 1,000 euros, dollars, or pounds, depending on the deal. And that makes it super accessible. Of course, it brings a lot of admin things that I'm not going to bore you with, but it's
that's
in
very
it.
hard doing retail. It's very you're doing a great job to do that. It's very hard to bring it in with that small size. It's always a lot harder than a big size. What do they say? Getting out of bed for 100 million or for 1,000's a lot of work.
I mean, I'm in that class. I can put 2K or maybe 5K sometimes. So I'm doing it for me and others. And we are lucky enough we get access to these cap tables because we have the podcast, and people want us to be part of things. So we basically just broadened that. And that's been amazing to do, and that just needs to grow. We have a lot of interesting deal flow, a lot of interesting people that have some spare. Of course, these are highly risky investments. Let's not oversimplify it, but it's been great to invest in 25, 26 companies. So that continues to grow as well. I think in terms of impact, there is an education piece that we're working on and thinking about specifically on the investor side. Like, how do we get more highly educated, understanding live biology and photosynthesis people in key positions where they are in charge of a lot of resources, meaning large institutional investors, larger family offices, because we need an influx of money, and we need them to be ready when all these amazing people we all know are starting to pitch and show up. And the problem often is that they pitch and explain things on grazing, on agroforestry, and basically the investment committee has no idea what they're talking about. And so the entrepreneur and fund managers, and Tony did that back in the day, ends up educating a lot, which is of course not their role. Their role should be pitch and then get a yes or a no, or go into that process. So I think there's a role there potentially for us, potentially to help to educate. And my 2 little pet peeves in terms of themes, they're not little, but are definitely food and health, which we have discussed before as well. And I'm still doubting what I should call it. I mean, water cycle restoration is not a very sexy word. Global cooling or climate cooling probably is, but I'm very interested, and we've covered it so many times on the podcast and will continue to do so. Like, what happens when we do regeneration strategically at scale in watersheds, in specific highly strategic places, and what happens to the local climate, what happens to the rain patterns, what happens to the rivers, what happens to the disturbance we have done, let's say, as humans. And we've seen it on local pieces. Many farmers have commented, especially at scale, like they see rain patterns change. The Haggertys that you introduced me to were talking about how the rain changed. We recorded last week, by the way. And so that notion of we have an influence on climate, of course, not just on negative, but on the positive, and on climate weirding and extreme weather events. And probably the best way to tackle that is to get a lot more life on the land strategically in certain places, is something that really, I think, is extremely neglected in our space and in the finance space at all. You would imagine insurance companies are all over this, or reinsurance companies, but they are not yet. So there's work to do there for us to get that notion, like we can cool significantly if we get more life on the land. And so we better get going.
Yeah, that's wonderful. Are you going to make the podcasts a little bit more subject matter specific? So, I mean, really, you've almost got education pieces in a lot of those podcasts. I mean, one of them I listened to was a guy who only did an English fund. I can't remember his name. And he was doing a fund for farmers in England only. And I thought, I wanted to know how much the model had worked and why weren't they doing it elsewhere? And it should be like, needing funding, needing education, needing, like if it could be catalogued for everybody a little bit more easily, because it's difficult to go through those 400 things.
Absolutely. And you hit the nail on the head, if that's the way of saying. We are working on a project actually kicking off this week, next week, to unlock, like, how do we unlock those 400 hours of audio, potentially even more? And how do we make it accessible, searchable, shareable, and really, because I don't remember what we discussed in most of them, let alone somebody to listen. Like, this is, and it's just a shame.
I thought, I wonder when I'll get to that point where I can't remember them. But it is easy.
Yeah, and now with AI, with transcripts getting good, not perfect, but good. I think there's
a lot of work fixing a transcript of. I wouldn't say.
Yeah. So there's a unique opportunity now to unlock, or to start thinking about how to unlock that, and to make it accessible for people that didn't spend 400 hours listening to all of that, or you speed it up. But so the short answer is yes, we haven't done it yet, but we're actively working on unlocking the knowledge that's there, because we've had so many amazing people that have been working on very relevant things, and there are a lot of lessons there that are locked into audio somewhere that we did 3 years ago or 4 years ago.
This has been a wonderful conversation. I'm so pleased you came. Finally, we got together to talk. And
thank you so much.
I really wish you well in it, and that the podcast continues to grow exponentially. I do keep telling people, have you heard Koen? And people go, who's that? And I go, oh, I thought everybody knew him, because I know he's on it. So I'm like, I keep interviewing a lot of your people on it, going, well, I must talk to him. He's really interesting. Because I try and listen and make sure I ask different questions and tap into different things, because there's only so much you can do in an hour of listening before people are a bit crazy with it. So I will let you go, because we had a bit of trouble getting on at the beginning, but we're up to that hour. So thank you so much. And I would love your feedback when I give you this video as to anything you'd like that, or you think might be better in the video, because I'm doing it on all platforms in terms of reading, listening, and all the rest of it.
Yeah, thank you so much for the work you do and having me on here. And we finally made it work. And definitely, I mean, almost every single guest we have deserves a bigger stage and deserves other stages, and has way more to say than we ever can cover in an hour.
I think it's also how much people can listen to without them going a bit bananas. Yeah. I mean, I listen to Joe Rogan's 3-hour videos. I think they're fascinating, but people go, oh, 3 hours, I couldn't do that. I go, oh, okay.
It's a selection mechanism as well. It's a filter. It's a filter as well. Like, if you're really hooked, you will stay. And yeah, if you're looking for the clips, you do something else. Yeah, I mean, I love the long form, because you really get to know someone, and our assumption is that people then want to reach out after, or not, and that's also fine, to potentially work together, invest, to cooperate, and things like that.
Well, look, if Joe Rogan can have 40 million people subscribe or listen or whatever it is, I think there's a lot more people out there can do long form than people realize. Yeah. Please keep sharing. So look, thank you so much, and I'll let you go, so I know you're frantically busy all the time. Wonderful to finally talk to you, and hopefully we'll talk again sometime.
Absolutely.
Bye.
Bye-bye.
Thanks for listening to Integration, where we explore the strategies that connect heart, land, and capital. If today's episode sparks something in you, share it forward. Until next time, stay curious and keep building the world you believe in.